Money FM 89.3, the best of the afternoon update.
Money FM 89.3, a very good afternoon to you. Now, as Donald Trump begins his second term as President of the United States, experts say President Trump's unpredictable nature will make 2025 a volatile year. Challenges ranging from the U.S.-China trade conflict to geopolitical tensions and market volatility suggest that Singapore's economy is in for a rockier ride in 2025. So on Industry Insight, we take a look at the asset management industry, which has been evolving rapidly in recent years. In this current dynamic environment, how are asset managers adapting their strategies to manage risks and seize opportunities while addressing key challenges in the region, especially in Singapore? What's the outlook for investment in 2025? To tell us more, I have Thomas Kaegi, Chairman of the IMAS Development Committee, on the phone with me. Welcome, Thomas. Great to have you on the show.
Hi, Lindley. Hi, everyone. Good to be here.
Thomas, as we look toward the investment landscape in 2025, Singapore remains one of the most dynamic and resilient financial hubs in Asia. So to start off, what are your general thoughts on the investment outlook for Singapore in the coming year?
Maybe before I start, obviously I'm representing here the Investment Management Association of Singapore, and we represent 160 members. Various asset managers in Singapore, and we obviously have to go to enhance and bring the industry further. Mm-hmm. And in that context, we are every year, towards the end of the year, we conduct a survey with our members, mm-hmm. where we ask them about how they see the market going forward, also about their challenges and their plans as an enterprise, as a company, what are they having in store, and that gives us a good pulse of how the overall industry thinks about the year ahead. And we were actually postponing this survey. Usually in previous year we had them slightly earlier, but we wanted to make sure that the election in the U.S., that we know about the outcome. So the results basically came in after the election of Donald Trump mm-hmm. was clear. So that could be taken into account by our member countries. And despite what you mentioned, it's going to be a volatile year. Overall, I would say that our members are reasonably optimistic that this year could shape out to be a positive year for the industry as well as for financial markets.
Okay, so your general thoughts are that things will actually be okay?
Yes, our member countries, if you look at the equity market outlook, they're reasonably positive, expecting high single-digit returns for indices across Asia. And I would say without the change in the White House, probably the members would have been a bit more optimistic. But even then, with a bit more volatile president in the White House, mm-hmm. the outlook is fairly positive.
Okay. Having said that, Thomas, the Ministry of Trade and Industry in Singapore has forecast that real GDP growth will range from 1% to 3% this year. This is less than the 4% 2024 GDP growth estimate given by the Prime Minister during his New Year's speech. What do you make of that?
If you look at the global economy, we are coming out of a fairly successful year with reasonably strong growth. But central banks globally, particularly with the US Fed, they managed to engineer a soft landing, or at least that's the expectations of companies who expect a soft landing in the US, with the US Fed gradually continuing to cut rates. So our survey expects about 25 to 75 basis points cuts in interest rate this year. And I think, when we look at the implications for the Singaporean economy, mm-hmm. this 1.3% that you mentioned seems a reasonable expectations given that outlook for the global economy.
Okay. Over the next few years, how do you see inflation and how might it influence investment strategies?
Yeah. Well, the outlook for inflation trend, I think, is reasonably positive in a sense that we don't expect inflation to pick up substantially. Concerns for stick inflation have diminished considerably. If you look at the advanced economies, inflation reduced from about 4.6% to 2.6% last year. And also in the U.S., inflation has come down substantially last year. So there might be some sort of pickup, but I think globally inflation should stay under control, and I expect something similar to happen in Singapore.
Okay, Thomas, I wanted to talk a little bit about the asset management industry in terms of trends. I think it's facing a pivotal year. It's got shifts in investor behavior in terms of rise of passive investing, and also we're seeing transformative technologies like AI and big data. What are you seeing? Do you think we'll see active management regain traction in 2025?
Yeah, Lindley, I think you're spot on. I think the asset management globally, and certainly also in Singapore, goes through quite a bit of structural change for various reasons. You mentioned the rise of passive investing. This has been a trend globally for the last 20 years, with more and more investors in the US and Europe adapting passive strategies. In Asia, to be frank, that only started to really pick up over the last 5 years. So where passive strategies, ETFs, index funds have started to see substantial inflows. And we've had that even last year across APAC. Active strategies still seeing positive net inflows. This has actually not been the case in Europe or in the US. So active strategies still attract investors' money, but increasingly the flow into passive is something that asset managers have to prepare with and do actually prepare their businesses for. Another trend that clearly came out from our survey and is not necessarily surprising is the rise of alternative investments, so private equity, private credit, infrastructure, even hedge funds being a bit of a longer-term trend already in place. Many wealth managers, but increasingly also more retail providers have provided these instruments to their clients, and that's only going to pick up further with more and more asset managers going into the alternative space.
Well, since you're talking about that, perhaps you could talk a little bit about asset classes that might be particularly attractive for investment in Singapore in 2025.
I don't want to give direct investment advice, but certainly what we expect to see is that inflow into alternatives will continue to pick up. But I probably speak for the member companies in our association that generally what is recommended is a well-diversified approach that requires traditional equities and bonds as well as non-traditional or alternative investments, be this private equity, be this hedge funds, to have a well-diversified portfolio that's aligned with the individual's risk profile.
Thomas, I know you're a veteran economist. You mentioned at the top of the interview that the Investment Management Association of Singapore has recently come up with a survey. So what's the approach in terms of balancing global macroeconomic trends with local market conditions in terms of Singapore's investment outlook?
I think Singapore as a very open economy is certainly exposed to the ebbs and flows of the global economy and investment trends. And if you look at the past couple of years, particularly in the wealth management segment, there has been a lot of investments in international asset classes. So global diversification has certainly helped investors in Singapore, and I would believe that will continue to be the case. In fact, my own company, UBS, where I work with, we have just released a study on diversification. Generally, diversification makes very much sense for investors in Europe as well as in Asia. International diversification, in fact, has not made much sense if you're an American investor. There, it has generally been a detractant of performance. But for any investor in APAC, we would strongly recommend to consider international diversification. And what I see from the people and clients I talk to, that's also what we observed, that most investors are very much exposed to US equities, European equities, other Asian equities in the region, as well as the same on fixed income.
Okay, so let's also focus a bit about the challenges that we might be facing. How do you expect things to play out? What kind of key challenges should asset managers and institutional investors look at when investing in Singapore?
Yeah, so clearly one of the big challenges we actually addressed, and that's the rise to passive, which not every asset manager here in Singapore has a lot of exposure. Passive investments, or the flows into passive, are often captured by a handful of big asset managers. So that's something that local companies have to keep in mind. The rise in alternatives that I mentioned is also something that many asset managers try to get exposure to, but that's easier said than done. Also here, the market is often dominated by large players. So that's something that local companies have to consider. But there are also a number of opportunities in terms of new product and new client segments which our member companies are increasingly pursuing. And more recently, over the last 2-3 years, clearly the rise of digital assets is something that is actively pursued by local companies and local asset managers, and also promoted by the IMAS, by the regulator, in establishing Singapore as a hub for digital assets and for the innovation that goes with it. Mm. There we see actually quite a few opportunities, and our member companies see quite a few opportunities to generate new business in that space.
Okay, and speaking of which, do tell us a bit more about your views in terms of Singapore's position as a leading center for asset management in Asia Pacific.
That's a very good point, and I think you have to only look at the trends we've seen in Singapore with many global companies, global asset managers putting up their headquarters here in Singapore, because the environment is very conducive to grow a regional presence, and that is obviously helped by the regulatory environment and the various incentives that the regulator, the IMAS and the Singaporean government have put in place that make Singapore a very attractive location. And then I would also say, to make a bit of self-promotion for the IMAS, for the Investment Management Association of Singapore, having an industry organizations like the IMAS here trying to promote the location, Singapore as a location for asset management, is obviously a nice and positive factor as well.
Singapore is often seen as a bellwether for the ASEAN region. How do you expect regional growth, particularly in Southeast Asia, to impact the investment climate here in Singapore in 2025?
Positive market environment is also always dependent on local growth. And as I mentioned, the growth in Europe and the US is expected to be a soft landing, and that will also be felt in Singapore, where Singapore is obviously positioned as kind of also close to North Asia and to China. The location is dependent on growth there as well. And the outlook for China is probably still a bit subdued, particularly many market participants are trying to assess the impact that any future measure of the U.S. administration will have on China's growth. So that's something that people are awaiting anxiously. In fact, I was just last week at our China conference in Shanghai, and that was the number one topic that was discussed. And everyone is taking a bit of a wait-and-see approach to see what kind of announcements will come out over the coming weeks from the White House that will determine certainly the reaction of China, but also will have an impact on the economic growth, to which Singapore is certainly exposed to a degree.
Thomas, thank you so much for your insights and appreciate your time as well, talking to us about the outlook for investment in 2025, as well as some trends in the asset management industry. Thomas Kaegi, Chairman of the Investment Management Association of Singapore's Development Committee. Thank you.
Thank you, Lily.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.